Right, okay. Hello, ladies and gentlemen, and welcome to episode. Hello, ladies and gentlemen, and welcome to episode number 3 of Keeping Up with the Keynesians. Today, I'm joined by Alfie, George, and Elliot. Guy, how are you both today?
Good, thank you, Oliver.
Not too bad, thank you, Ollie.
Brilliant. So today, we're going to be talking about stock market crashes and whether we are about to approach a new one or whether markets are going to be safe for now. So why stock markets? Stock markets have been at record highs recently. They've recovered recently after COVID, but there are fears that they are rising and possibly crashing. So are we going to head into another 2008 style crash where stocks plummet dramatically? Elliot, do you want to talk about the stock market overview?
Yeah, so let's start with the basics. What is the stock market and how does it work? At the moment, it's looking quite strong. There's a thing called the S&P 500, which is an index of the top 500 performing companies in the US market. If we look at how these indexes are looking at the moment, they've been very high, which could indicate that we could be heading towards a crash course of stock market crash.
I'm in danger!
Tech stocks rebounded after a tough 2022, but are they overpriced again? Because as we know, we use tech constantly in our daily lives, and tech stocks could likely be overpriced, which would be an indicator of a potential stock market crash.
Thank you, Elliot. I mean, Alfie, do you want to look at some of the warning signs that general public should be looking for to see if another crash is coming?
Yeah, well, Elliot, I think your points, they're kind of only really at the surface level at the moment, so we take a look underneath. Currently, inflation rates remain high, so that means that the cost of borrowing is expensive. Therefore, companies struggle to invest and expand, leading to economic growth. Furthermore, the Buffett indicator has passed 200%, and for those of you listening who don't know what the Buffett indicator is, it's a valuation metric that compares the total US stock market capitalization to its GDP. So at 200%, this suggests an extreme overvaluation of the stock market in current times.
So, Alfie, why do you think the FTSE 100 figures are so high at the moment if companies are struggling to borrow and invest money?
No idea.
So if there's high interest rates and companies are struggling to borrow, they're struggling to invest money, is that really evidenced in the figures?
The figures are based on previous judgments. There's high rates of overvaluation at the moment, so people, they're very optimistic, and that stems to demand. There's a lag time between the investment and obviously stock markets actually increasing, as you would know. So that lag time is, I think, fundamental in determining the prices of the stocks.
Brilliant. Thank you, Alfie. I mean, if you look at past historical situations, you've obviously got the 1929 depression. So in Black Tuesday, where the market dramatically crashed. I mean, Alfie, can you look at the Great Depression?
Yeah, so the Great Depression of 1929. So during the Roaring Twenties, stock prices surged as people speculated heavily in the market. Optimism was high, and many believed that the market would continue rising indefinitely. However, over-leverage and excessive speculation created a bubble. But on October 29th, Black Tuesday, panic selling led to a massive market collapse, and the market dropped by 90%, which resulted in taking 25 years for the economy to recover.
Yeah, so following on in 2000, we saw the dot-com bubble after tech stocks inflated massively due to technological developments. After the bubble was burst, as you say, and people realised that they were overvalued, $5 trillion was wiped out when the bubble burst, leading to mass layoffs and economic slowdown and downturn. While painful, the economy did manage to rebound. However, this could have been a possible factor for why the economy didn't fully rebound to where it should be, and then led on to the 2008 financial crisis.
Yeah, so the 2008 financial crisis, which was basically a housing market collapse, where banks handed out risky loans to people, also known as subprime mortgages, where they would loan loans to people with poor credit so they can get onto the housing ladder. But inevitably, when homeowners started defaulting their mortgages, the system unraveled. Lehman Brothers collapsed, which triggered the stock market to plunge almost 57% in global stock markets from 2007 to 2009. But as a result, credit markets froze and the world entered the worst recession since the Great Depression.
From the past week, the key takeaways are overvaluation, for example, the tech stocks of the 2000 dot-com crash that Elliot spoke about. Also, other sectors become overpriced due to speculative investments, like the housing market. Elliot, do you want to talk about the other key patterns?
Where are we?
Oh, brother, this guy stinks!
I was just going to say a more relevant example for our younger listeners. In 2020, we had COVID, the pandemic, shutting everything down, laying off workers, obviously resulted in the dire situation that we've been left with for the last 5 years.
Good line of thinking, Alfie. You must have got that from an incredible economist.
What?
I don't know if you listened to episode 1, mate, but I said something quite similar.
Oh, right. Yeah, sorry, mate.
So if you look at today, we've gradually recovered from the COVID-19 thing that Alfie mentioned, but there are some warning signs that we see today. You've got overvalued tech stocks. You've also seen high-risk investments, and I guess if you look at the current global situation, I think investments are more risky because confidence is very low, especially with Donald Trump right now. I think a lot of people are taking punts with their investments.
Yeah, definitely. There's a lot of speculation at the moment.
So anyway, we're going to have a quick debate now about whether we think... Anyway, thank you, that was a good debate. We're going to now go on to our side segment for the episode. Crash or correction, another alliteration. So in this... Yeah, I know, I'm at it again.
One more and it'll be a rule of 3.
Shut up.
Oh, bro.
The clues in the name, we're going to have 3 scenarios for episode 3. Ironic. God, this is so bad. We're going to have 3 scenarios, and you're basically going to tell me whether you think it was a crash or a correction. I'll explain it to you. I just want each of your opinions on the topic. No looking at the answers, please, unlike Ross Galway last week.
Well, I'm pretty sure that one was 13.3%, so...
Don't take the piss.
Previous contestant.
Yeah.
It was cheating entirely.
Salty James in the background. Really. Anyway, so scenario number 1, we're going to go for the 1994 interest rate hikes. Did this lead to a major crash or a quick recovery?
I'm going to say a relatively quick recovery on that one.
I'm going to have to go against that.
So you're saying crash?
Yep.
The answer is it was a correction. So Alfie did take that one. That was a great stage correction, Elliot. Anyway, the market stabilised by 1995. It was a relatively smooth recovery, so it didn't turn out to be disastrous. Scenario number 2, we have 1987 Black Monday. Was this a reset for tech or a full-blown crash?
I'll take the floor on this one. Black Monday, following on from the Great Depression of 1929.
No, it wasn't.
Well, it was in 1987, mate.
I know that. Black Monday. I'm saying following on the
Do you want to
name.
step off the floor? And I'll take
Following on from the Black Tuesday, we have Black Monday. Therefore, I think it's a crash.
So what's the correlation? Okay, get rid of that.
Sorry, that's what I was going for.
I don't think that's going in.
That's not good. That's not going good. Let's restart that one. Restart. Say United States. I'm taking
Right.
the floor.
So
Let me finish this.
They want the anticipation.
Go.
On live TV.
right, this is not
I
ITV.
said live TV.
Live TV.
It's
It's not. Scenario number 2, we have 1987 Black Monday, which was following on from the introduction of major technologies building up to the internet. Was this a reset for the tech markets, or was it a full-blown crash?
I think the clue's in the name. So following on from my discussion of the Great Depression, not the Great Depression, the Great Depression, yes, in 1929, on Black Tuesday. Therefore, I think Black Monday from 1987 is a crash.
I do tend to agree with you, actually.
Someone's had a
Anyway.
sneak peek of the answers.
I'm not having
Right.
I couldn't tell you what the answers are. Except
Anyway.
from my knowledge.
Well, your noggin is right. The answer was a big crash, including the name Black Monday. Like Black Tuesday in 1929, the market took months to stabilise. It was quite disastrous and was considered a major crash. Scenario number 3, we have the COVID-19 stock market crash. However, was it a crash or was it a correction? What are your answers, Al? Yeah.
I think it's a difficult one because obviously very recent in memory, and I don't remember there being huge information about the stock market crash. I'm gonna have to go with crash.
If I'm honest, I'm going to agree with Elliot on this one. We can see there are definite signs of negative effects from COVID, so I am going to agree with Elliot on this one.
So, I mean, it was classified formally as a correction. Markets did rebound within a few months, but there was some collapse involved. So yeah, a bit of both answers were right there, so well done to you both. So the stock market is obviously unpredictable. Panic and hype drives these swings in the market rates. But history shows us that some of these crashes are recoverable. But the real question is, where are we headed next? I mean, you've seen at the moment, people are very hyped about stock markets. Yeah, I mean, Cheltenham's on at the moment.
Yeah, safe to say some of our panel members have not done so well in that one.
Constitution Hill, if you're watching, we're very disappointed. But anyway, markets are high. The history shows that they don't necessarily result in a crash. Should you sell your stocks or should you hold firm? I think the answer isn't that simple. I think you'll have to watch it very carefully. So, a question to leave you viewers with: do you think we're heading for another stock market crash? Let us know in the comments. Keeping up with the Keynesians at gmail.com. We are on social media everywhere you see. We have actually recently gone viral. Yeah, make sure to check that out. Keeping up with the Keynesians on all the handles. Thank you very much to Elliot and Alfie.
Thank you
See you
very
next
much.
time. Thank you.
We'll see you
See you
next
next
time.
week.
Wait, Hewes.
Let me just get a photo of you three.
Or just like
What have you been
just
doing
like,
the whole time?
No, but like